Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. We have a lot to discuss today. If you're wondering what the stock market's going to do for the remainder of 2022, we're going to discuss that today. We're going to discuss the big CPI number that everybody's trading right now, or actually I should say waiting for. We're going to discuss the difference between day trading and swing trading right now. We're also going to talk about hedging portfolios with stocks that are potentially going down versus your long-term portfolio. We're also going to talk about tech stocks right now. And if you have tech stocks, you really want to be paying attention to this right now. There's a big storm coming and it's not looking good for tech stocks. Could they possibly get crushed over the next 3 to 6 months? Yes. And we're going to talk about some of the tech stocks that are actually holding their bid. I think a lot of people right now, at least the feedback that we're getting, are hanging on, hoping the market turns around. There's an argument right now that a lot of people are using that the market always goes up. And in the long run, that might be true. But if you need that money in the stock market anytime soon, you really need to be paying attention right now because there's a lot changing. And you know this because you've been going to the gas station, you've been going out to dinner, you've been going to the the supermarket, and you know prices are going through the roof. This is something that we have not experienced in a very, very long time. It's kind of a perfect storm of ugliness right now in the market. But I'm going to help you find some pockets of opportunity, some of the best stocks to buy right now, including tech stocks that are holding up, that have had really good earnings per share this year, even in spite of what's going on. Some of those were helped by government regulations. This week actually had a monster move up on Wednesday. So we have a lot that we're going to break down, but we're going to actually start out with sector rotation. And that's going to be the very first thing that we do. So stick around. I'll be back in just 1 second. Okay, so thank you so much for being here with me today, everybody. I really appreciate it. Stock Trading Pro is built for you. Our mission is to help you make better trading decisions. Obviously, everything that we discuss here, educational purposes, it's up to you to make that final decision. I want to first talk about what's going on in the big picture of the market and how you could maintain your sanity as stocks are just kind of bouncing around, waiting for the next move. I think it's generally accepted right now, if we kind of mosey on over into the news. I just want to make sure that we have this ready for you. If we pay attention to this, which is the big thing that's on everybody's mind right now, gross domestic product, obviously the CPI number coming out this week. This is really the big thing that I want to make sure it's highlighted here. The second quarter down is really what everybody's looking at right now, because consecutive quarters of negative growth is the textbook definition of a recession. Now, a lot of people are saying, is it a recession? Is it stagflation like we had back in the late 70s, early 80s? Either way, it's not awesome for stocks going up right now. And we just got to be clear about that, because if you're trading or investing with kind of your head in the sand saying, no matter what, it's going up, that might be true. And we might be looking at that over a much longer time period. But that doesn't mean that you need to sit through the pain right now and watch your account just go down. So you need to make a plan. That's really one of the biggest things that has allowed our community on a day in and day out basis to take advantage of what's going on. So we're going to talk about the Fed a little bit more with the Fed meeting next week. We're going to talk about Tesla. Tesla is a big conversation right now. Obviously, Elon Musk has a ton of stuff going on right now. I personally, as an entrepreneur, somebody who's been in business since 1988, I think he's all over the place. And if I was on his board, I'd be reining him in right now. I know it's a little bit hard to talk to the richest man in the world and tell him he's doing something wrong. But I think in this case, he needs to dial it back and just start focusing on the stuff that what is the upside of what he's doing with Twitter right now? I really don't see it. He's not going to change the Constitution. It is what it is. It's a company that can decide who does what they do. I just think that it's wrong, quite honestly. So we're going to break down Tesla. And is Tesla a buying opportunity right now or a short selling opportunity? We're going to take a look at some of the other electric vehicle stocks, but I want to break down sector rotation first. And then we're going to take a look at some tech stocks that are actually holding up. And like I said, they've had good earnings per share this year, despite the fact that the Fed has raised interest rates, despite the fact that we are in right on the border of a recession right now. So let's start out with sector rotation. Okay. So if we work our way all the way over here, it's very important to look at it over time. And let me actually zoom this in a little bit for you here, where you can see at the beginning of the week, we actually got a really nice spike on consumer, cyclical, and technology stocks coming into the week. So this was last Friday coming into Monday, but the bigger picture really did not look that awesome from a monthly perspective, which is the last 4 weeks of trading. You can see now from Monday's trading heading into Tuesday, energy continues to be the dominant force here. And again, if you haven't been watching some of these energy stocks, just absolutely exploding to the upside. And you can see the performance numbers across the board. And what we're starting to see now is basic materials starting to work their way up the list, industrial starting to work their way up the list. So now this is heading into today. So I'm now telling you, like, one of the things that we do differently here on our Stock Trading Pro channel is we're not concerned with what happened yesterday. We're trying to stack the argument, build a case for which stocks we should be looking to buy now. Obviously, we want the best stocks to buy now so that we can take advantage of it throughout the week. And I don't want to focus on what happened yesterday, what you could have done yesterday, what you should have done yesterday. It's actually a big part of what we do in our community, where I'm challenging everybody. If you missed good opportunities as a day trade or as a swing trade, or maybe even a longer term position trade, you should not be wasting your time talking about the fact that you missed it. What you should be doing is asking yourself why you missed it and how you could make sure you catch it the next time. So we're breaking down these sectors and we're looking at how they're rotating from one day to the next. Clearly, energy is at the top of the list. But if you know a lot of what we do, we talk about order flow, which is tracking and piggybacking the smart money, the deep pockets that move the markets. Then we talk about tape reading, which is how we stack the odds of a trade moving in our favor, where we're looking at the market, the three indices, then we're looking at the sectors, the industry groups, and then the stocks themselves, which includes volume and some significant reference points that we watch. But the last part that a lot of people miss is the optimal entry. So we're taking a look at the energy group right now, and a lot of people reaching out to us asking us, is it too late to start a new swing trade on the energy stocks right now? The answer is yes, it's a little bit too late. So many of them have exploded to the upside. And actually, we'll take a look. I just want to give you a little bit of a better feel for the way that they have been trading. We actually had mentioned this last week, and we're talking about over here. So we're talking about at least 4-5 days ago, prior to them moving to the upside. And again, if you're not familiar with some of the ideas that we're talking about right now, we're talking about Chevron, COP. There's a big list of these stocks that have just exploded, and the optimal entry was about 5 days ago. So would I be talking to our community right now about entering new swing trades on the energy side of things? And the answer is no. I would definitely be looking to day trade the energy stocks. But for me right now, remember, professional traders manage risk first. So pick a side, then pick a spot. Right now, the side is obvious, but the spot is a little bit late. So I'm looking at a shorter term trade for cash flow on the energy stocks. But for me right now, they need to pause so I could manage risk before the next push. That doesn't mean that we can't find some opportunities. I want to go over to the tech side of things right now, and we're going to work our way into some of those ideas. So you can see the fact that tech was number 3 coming into the week, kind of worked its way down a little bit and might not look the most attractive right now, right? It's number 5 on the sector rotation. Last 5 days have been pretty good, and yesterday was pretty good. So what we want to do is we want to do a little bit more of a deep dive into tech stocks. So the tech stocks that I'm about to talk about right now, some of them I've been trading every single day. Some of them have a little bit longer term benefit to them, where they have kind of a little bit more of a financial backing behind them, which is something we normally don't talk about, that we're going to talk about a lot more frequently, is where their earnings per share has actually grown by at least 10%, if not more, for this year. So not only do they meet the technical requirements for me to actually want to consider them, but they also have a little bit of financial statement juice behind them. So I want to give you that list of tech stocks right now, but we need to give a little bit of a backdrop, because when you're looking at ideas, one of the most important things you can do is look at relative strength and relative weakness. I have a sneeze coming on. Excuse me. I'm going to try and hold it back. So when the market does something obvious, you notice which stocks are moving with the market, and you notice which stocks are moving against the market. Obviously, the easier trades are when the market's obvious, right? And the group is obvious. Those are the ones that you hang on to the biggest. Now, this is really kind of an interesting point because we've recently run a poll inside of our Facebook group, and I want to share that with you because all of this is really coming together on how to hang on to and when to hang on to those bigger ideas versus when you should be trading for cash flow. So you can see the poll that we ran recently, and it's actually still going. Which of these two are your biggest trading challenges? Now, what's interesting is wrong entries is actually at the bottom of the list, which we're going to talk about that in a second. Loss is too big, next to the bottom. Overwhelmed, which is interesting. That just simply means that there's too much information to look at. And then the winners are too small. Now, we want to focus on winners are too small right now. Put this in the context of tech. So we're actually going to talk about that in the context of this. Okay, so tech's decade of stock market dominance ends for now. The tumble is the worst since 2000, and value investors are taking a victory lap. So what does that actually mean, that value investors are taking a victory lap? It means that some of the overvaluations that we had during quantitative easing in 2020 and 2021, where the Fed made money very easy and it basically punched the market up much higher, interest rates were down. That is reversing. Tech stocks generally fuel their growth. So again, growth stocks with borrowing money. When borrowing money is cheap, which basically was at zero, it's easy for them to see that growth. However, things have changed. Now that interest rates are starting to go up and people have less and inflation. So let's put these pieces together right now. As inflation is going up, that means our dollar that we want to spend doesn't go as far. So are we going to be buying things that are kind of nice to have, but not necessarily something we need? And I think most of us can agree that those are the tech things that are kind of cool, but not necessarily stuff that we need. So as inflation is going higher, our purchasing power is going down. Inflation is also going up, right? Inflation is going up. Interest rates are going up. So interest rates going up, not good for tech stocks. Inflation going up means our dollar that we're spending money with is going down, not good for tech stocks, right? So it's the perfect storm where this is why I said, if you have tech stocks in your portfolio right now, you really need to think about what you're doing with them because we're lining up right now. We're in June right now. The next 6 months of the year could get kind of ugly in the big picture for tech stocks, which is why we want to kind of stack a little bit more than just technical chart patterns behind ideas that we're looking at. But we do want to talk about Tesla before I give you that list of stocks that meet the criteria, not only from a fundamental perspective, from an earnings per share, but also from a technical perspective. Okay. So let's talk about Tesla. Let's talk about Tesla and whether or not we should be looking to be a buyer or a seller of this guy right now. So you know that one of the things that we talk about when we're on this channel is order flow. And the specialty that we have is stacking the order flow. So one of the questions that we get, let me actually come back over here. We're going to go over to the market first. And if we take a look at the market and specifically the SPY, and if we break this down even further on the hourly chart, you can see pretty clearly here that the market right now is kind of stuck, right? We're literally sitting in this window here now going on 4 or 5 days, coming off of this big move to the upside. So you can technically say that the market's in a short-term rally and a pause. And that would absolutely be a valid argument if you are looking at nothing but the short-term price action. So this is really what separates you from somebody who understands, getting back to that poll, hanging on to good trades longer. You need to first identify what kind of market conditions are available, because we have to take what's available, not force the market to give us what we want. That doesn't work. None of us are bigger than the market. So if we can take a look at what the market's doing right now in a little bit of a bigger picture, the SPY looks pretty awesome, right? Nice push. You could make a case that that's a nice, clean flag, right? But for who? That's the thing. What kind of trading business are you running? Are you running a day trading business? Are you running a swing trading business? Remember, we talk about this all the time. You hired yourself to be a money manager. So I'm going to challenge you to ask yourself right now, what are your qualifications to do that? And how detailed is your plan to manage that money? Are you trading it on the short term or are you trading it on the long term? So this is really where you really start to elevate who you are as a trader by putting the pieces together, by building that argument, by tape reading and saying, okay, for the trade objective of my trading business, meaning you, I am looking at these types of order flow. If I plan to hold these trades over days, weeks, and months, I need to find the dominant order flow in the time frame that I plan to hold the trade. So if we're looking at longer term ideas, this is a very short term idea. But when we put that in the context of the big picture, we still have dominant moves to the downside. So this is really where a lot of traders get into trouble, and quite frankly, investors as well, where they're not using the right time frame based on how long they plan to hold the trade. Now, here's the argument that I get on the other side of this equation. Well, what if I want to turn a short-term trade that I got into a long-term trade? Well, I'm going to tell you, you're doing it wrong. And I very rarely say that because I like to be positive, Pete. I like to be, let's go in that direction. Let's figure out what we're doing. But here's the problem with, I put this trade on and now I want to turn it into a long-term trade. The problem with that is when you first put that trade on, and again, this is stuff you want to write down, maybe watch this more than once. When you put that trade on first, you need to know what your risk is and how much you can likely make on that trade. In our universe, I teach people in our boot camp that you have your initial stop loss and you have your initial profit target based on how you stack that order flow and read the tape and hopefully buy it as close as possible to the optimal entry. But if you have that kind of trade, you need to map that out. If you put on a trade and you have no idea what your profit potential is, you have no idea what the right risk is for that trade, then that means you have no idea what's the right position size when you first put that trade on. So to really bring that home, you need to know what type of trade it is before you put the trade on. Now, what's interesting is the normal reason that traders turn a day trade and make it into a swing trade, or turn a swing trade into an investment, so that you're going, oh, it looks good as a longer term trade. The normal reason for that is because you blew your stop loss, because whatever the trade was supposed to do, it didn't do, and now it's moving against you, and you're like, oh, no, it wasn't a day trade. I'm going to hang on to this for about a month now. That's because you didn't have discipline, and that's the that's the path. That's the quickest path to Mudville. You don't want to do that. You want to have exact strategies of where you plan to get in and where you plan to get out. Now, the challenge that a lot of people have, again, in these kind of ideas, and we're going to bring this all the way back to Tesla, is that you, for some reason, believe that holding on to that trade is the only trade that you're ever going to have in the rest of your life. And I know that sounds silly, but that's what I used to teach people on my trading floor. I'd be like, so let me get this straight. Let's use Billy Boising as an example, right? Let's use Billy as an example. So Billy's in a trade, stuck in a trade. I don't know Billy, never met Billy. But let's say Billy's on my trading floor in New York City and holds that losing trade. And I walk over to Billy and I'm like, why are you hanging on to that trade? Clearly not doing anything that you wanted it to do. And he makes up all these stories about why he wants to hold it. I was like, okay, so let me get this straight. You're hanging on to a trade that is clearly not working out because you believe that that's the only idea that you're going to be able to make money on today, this week, or this month. No, I'm here to tell you, for all the doom and gloom that you're probably hearing in the market, right? And obviously you can see this it's kind of a funny picture of Jerome Powell. Look how angry he looks like, right? That's actually what's going on in the world right now. For all the doom and gloom of what's going on in the market right now, I'm here to tell you, there is amazing opportunity in this market right now, provided you do the work, provided that you do your game planning. And again, you're going to want to screenshot this, provided you do your sector rotation and you understand where the market is money's going from one day, 1 month, and 1 week to the next, provided you make your big list of the stocks in play, provided that you go into the day with a big list of stocks that tell you these stocks are in play. By the way, as a leveling up kind of thing. Remember how we keep talking about stacking the order flow, stacking the argument, increasing the odds of something moving in your favor. When you start to do your game planning and when you start to do your research, which again, I don't know how much everybody else does. It usually takes me at least 90 minutes to 2 hours every night to prep and give this list of stocks to our community. You want to go one layer deeper than just the stocks. You want to see where is all of that money flowing. So if we actually move this on out and we sort this, you can see consumer cyclical and Chinese stocks specifically hanging into the bid. By the way, CPRI is one of the stocks that has had some pretty good financials that we've been looking at lately. But look at the energy sector here. Look at the dominance in the energy sector. And industrials working their way through it as well. So some of the industrials we've been keeping an eye on that have been popping up. Raytheon actually has been one that's popping up into the list as well. So then you break that down even further. So this is the bigger picture. So remember, if you're a regular viewer of the channel, and I hope you are, if you haven't, please do me a favor, hit that subscribe button. If we provide some value, also hit that thumbs up button. It'll let me know that I'm helping. So you got the market, right? We just broke down the market. We did the hourly picture of the SPY, which is kind of going sideways right now. If we break this down a little bit here, looks good on the hourly time frame, which is here, right? Looks nice. Looking like we're just getting ready to break out, right? You got maybe another level of resistance up here around 428. We do have this bigger picture right now, and now we're going to break that down and make it a little bit cleaner, where we had 1, 2, 3, 4, 5, 6, 7 weeks of selling. We went well bid, and then we said what we wanted to see after well bid is follow up by well bid. Now, is this like that? No, clearly not. So what is the market doing right now? We're kind of in the middle of nowhere. So let's actually bring that over to Tesla, okay? If you were looking at this chart and you had no idea it was Tesla, what would be your assessment of this idea? Would you say this stock is a really good buying opportunity right now, or would you say it's kind of a do nothing? How would you build the argument? Well, Tesla has a giant reversal candle here, a bearish gap, and now we're pausing. So we're technically pushing down and pausing, pushing down and pausing, pushing down and pausing. Big level of support down here at 543. That's a big level down from where we are right now. So when you factor in everything we just talked about, car company, tech company, however you want to talk about it, Tesla as of right now, for me personally, I do not see a reason to be a buyer of Tesla right now. If Tesla, excuse me, I'm trying to hold that sneeze back. If Tesla gets down to that 540 level, I would quite honestly be pretty scared. But let's talk about that. That is $180 away. The next big support level for Tesla is $180 lower. So again, you're watching this, we want to level up. We want to think and act like somebody who's different. We want to think and act like a professional trader. That's what professional traders do differently than retail traders who are kind of all over the place. Right now, if I was a long-term holder of Tesla, you have to be asking yourself, do you want to sit through a potential $180 move to the downside? Do you want to hedge it? Do you want to hedge that position with other opportunities? Maybe buying puts, maybe trading a different stock in a different direction, which is actually what we're going to get to now. We're going to kind of do a reverse hedge right now. So if Tesla, which is bearish right now on all time frames, quite frankly, kind of hanging out now at a 4-week support level, 4-week pause, could you hedge a potential move to the downside in Tesla by buying technology stocks that are showing strength? So we're actually going to take a look at some technology stocks that are showing short-term strength, an entire industry group that got really good news this week, and all of the stocks we're about to talk about right now also have good earnings per share over the last year, which means that their profits are going up at the same time that a lot of tech stocks are taking a hit right now. So we're actually going to take a look now, and we're going to go over to the daily chart. So again, I just want to be super clear about what we're talking about. We're talking about the potential of Tesla going down. We're talking about the potential of stocks that are right now exhibiting strength going up. So we'll be buying these stocks, hedging against a potential move to the downside in Tesla. So you're kind of washing each other out. So if Tesla goes down, the move to the downside in Tesla is being offset by the gains if these strong stocks continue to move to the upside. Now, what's the worst case scenario? The worst case scenario is Tesla goes up and these tech stocks go up at the same time. That's pretty cool, right? But professionals manage risk first. You hired yourself as a professional money manager. Whether you want to admit that or not, you opened an account, you're watching this now. I really appreciate you being here, but you're a money manager now. Money managers focus on risk first. So we're talking about kind of a reverse hedge where if Tesla goes down, we're looking for these stocks. So here's the list of stocks, okay? Just want to give you the list and we're going to go over them. Now, a lot of these are in the solar group right now. You can see clearly that these stocks, while the market is taking a hit, this group of stocks has been kind of taken off. We're coming into a little bit of resistance here. But yesterday, ENPH, which is up a little bit even this morning, traded into what we call a bullish U-turn yesterday. So again, these tech stocks also have good technicals as well as some financials juice behind them. So we have ENPH, Nova, and we're also looking at Run in this group of stocks. Now, some other tech stocks that we're looking at, and I guess this has to do with people being stressed out. Bumble, believe it or not. This is actually a tech stock where the earnings are actually going up, and you can see that we're actually following through. Got a little bit of resistance over here, but we're looking for the next move to be up towards 47, which is another $15 higher. ON, which had some good news this week, still looking for this to break out. But again, you can see we got a push and a pause, a push and a pause, a bullish gap, push to the upside and a pause. So the better trade for me in ON right now is through 68, but you can see that we're actually off of level. So good. Sticking with the semiconductors, AMD. AMD is the next one. You can see that we finally broke this longer term move to the downside. Look at this volume expansion in AMD since earnings. This stock is actually trading pretty well and one of the few stocks that are holding the bid. Another one, and again, I want to be clear, all of the stocks that we're looking at right now not only meet short-term technical criteria for me to be interested, but they also have some financial numbers behind them to validate the recent relative strength compared to the market. So the one that we're going to show you right now is not in a ripping move to the upside, but it is showing relative strength and has the financials behind it that we've been looking at. And that stock is APP. APP now is finally pushing up, holding resistance at the 50. Now we're looking for volume to expand and get us through this level. Now, you know that if you're a regular viewer of the channel, one of the quickest ways that we look for potential profits is we use our Fibonacci retracement. And the first target that we'd be looking for in APP, if it continues to move to the upside, is right around this 69.50 level, which is a pretty decent move to the upside. And the last one that we're looking at here is DOCN. Now, what's super interesting about this, obviously with the financials behind it, you look at this nice move to the upside while the market's kind of still pausing. But look at this. This is really the big thing from a technical perspective. We have a really nice push, and now we're pausing at what's a significant level, obviously the 50-period moving average. But this is the big part here. Volume decreasing during the pause. We get this question quite often where a lot of people ask us, what am I supposed to look at when my stock pauses? What is good to expect follow through, and what would make me sit up in my seat and say something changed? So as a general rule for watching your ideas, and again, you hear me talk about this all the time, we make money during the push and we manage risk during the pause. Now, to us to set up another trade looking for a pause to follow through, we want light volume pauses or decreasing volume during a pause, and that expects to follow through. If we see a stock pushing up and volume is heavy during the pause, that means something is changing on the tape, and we would expect that to at least pull back a little bit, if not reverse. But what we're seeing here in DOCN, you can clearly see that as it pushed up, volume has decreased dramatically over the last week, and it's kind of holding the bid. One other group of stocks that we've been asked about quite a bit recently are the financial stocks. I just want to say very clearly, I love to trade the financial stocks when they're in play. Interest rates going up should be increasing their margin, should lead to better moves to the upside, and it kind of looked like they were doing that. So specifically the ones that I like to trade the most, I like Citigroup, Morgan Stanley, JP Morgan, and Goldman Sachs. So we're just going to break those down a little bit. They've been a little frustrating the last 5 days. Prior to that, they actually had a little bit of a nice move to the upside. If you remember over here, Citigroup got this big gap up when Warren Buffett said that he was building a position on that in the first quarter. And we were getting some really nice moves. A nice push, a pause, a nice push, a pause. And then this pause here, which happened well above the 50-period moving average, I'm just going to tell you straight up, we were buying this support of the 50. We were buying this support of the 50 and buying this support of the 50. None of them followed through. So I kind of cooled my jets a little bit here. And now I'm waiting for these guys to get through this resistance level before I start to get involved. JP Morgan had a little bit of a more clean move off the lows and holding the bid. And you can see volume decreasing during this pause. They're just not performing like they should be right now. Morgan Stanley is another one. And Goldman Sachs, obviously, another one. So we're breaking this down right now just to recap what we talked about today, because I want to make sure you have actionable stuff going into the market today. Energy stocks, not even a question, are strong right now. The question you need to ask yourself right now is right now the optimal entry to be getting involved in a new swing trade on the energy stocks? And for me right now, the answer is no. I'm only looking to day trade the energy stocks right now. Financial stocks kind of cooled off a little bit, but we want to go into the other ideas that are showing some of the best relative strength right now. And as again, we broke these down a little bit. Some of the stocks, let me actually make this here again. These are in order of strength going from the last 5 days. So because the market is kind of still stuck in this box over here, we've been leaning on order flow over a little bit shorter time frame. So getting back to the market doing nothing, we are now looking at relative strength over this period. So you probably want to snapshot this and get an idea, and you can see some of the ideas. These consumer cyclical stocks on the Chinese stocks that have kind of had a little bit of a relief valve, I guess is a better way to say it, that they're finding bids. So you can see some of these stocks like PDD, which have actually been popping recently. So what I'm walking you through right now is what I'm looking at the market right now. The big picture of the market is kind of sideways. We're kind of stuck. That has me shifting now over into cash flow mode, where I'm going to be looking to book some shorter profits and manage those winning trades a little bit tighter. We had a bunch of good winning trades in Chevron and ExxonMobil yesterday. And until when the news comes out, the CPI number this week, the GDP data coming out a little bit later, I'm going to continue that until we either pop or drop, and then I'll be a little bit more aggressive. So again, to recap, what we're looking at right now, the market is stuck, waiting for that big picture move coming on the CPI data, which is coming out on Friday. You need to determine which order flow you're trading. Again, are you day trading, swing trading, position trading, or investing? Because that's going to dictate the information that you're looking for to have conviction in that idea. Then you need to determine whether or not you need to hedge some of your ideas. So we talked about before, we use Tesla as an example, where there's bearish order flow in Tesla right now. And us as professional traders, we want to hedge strong stocks against the possibility of Tesla going down. And we gave you a big list of tech stocks that had good earnings and good relative strength to the market. So we're kind of mapping out everything this week. Now, does that sound like a lot? Well, look, I mean, what do you want to do? How much effort do you want to put into running this business? If you hired somebody else to run it and you ask them, how much work are you putting into managing my money? And they tell, well, I'm doing some scans on my tablet while I'm watching reruns of Arrested Development. You'd probably be angry at that person. So hopefully what I'm inspiring you to do at the very least, okay, at the very least, to keep it simple, is make sure you're looking at some sort of rotation of where money is going on a daily and weekly basis. So we got the week, we got the month, and we got the day. This is by far the easiest way to simplify what you're doing in the market, because we're not guessing. This is being created because smart money is buying. It is being created because smart money is selling. Now, one of the things that's interesting here is consumer defensive is kind of taking a hit, which is a little bit shocking. Stocks like Walmart and Target and TJ Maxx and even Costco took a big hit. They're starting to creep their way back. But now the argument there is about inventory. So let's be clear about this. We want to talk about the future. We want to talk about what trades we're setting up going forward. If inflation does come in hotter than expected and it goes up as opposed to showing its peak, that's what a lot of people are looking at. And that's the language we're going to look for on Friday when they announce it. Has inflation peaked? Does it look like it's slowing down? If that happens, the market's going to rally. If they come in and the data shows that inflation is still hot, that means that the Fed's going to have to react next week, maybe a little bit more aggressively, and then we'll be looking at stocks that will most likely go down. Now, a lot of these consumer staple stocks like Walmart and those kind of stocks have already taken a big hit. So we actually had a trade yesterday that opened massively down and then rallied back in the other direction after they said that the margins were lowered, and fully expecting the stock to go down. But this is thinking things through, right? So we're talking about this dude right here, where it had this big move to the downside. And then yesterday, a pretty vicious move to the upside off of the open, right? So this is really where, as a team, we have to start thinking through, was that bad news already priced in on their earnings? So now when inflation comes out, if inflation is hot, These are the stocks that I expect after this big move to the downside to find some buyers in the storm of worse inflation or inflation going up. So I'm telling you what I'm looking for after Friday on Wednesday. So it's going to be kind of fun to watch. So we're going to be looking at those stocks that are already beaten up to catch a bid. All right. We mapped out a lot today. You might have to watch this video one more time to take a screenshot of that big list of positive stocks that were strong coming into today. It was a list of 50 something stocks. We also talked about, I think we gave 6 to 8 tech stocks that are showing good relative strength as well as good financials from an earnings per share perspective. So we covered a lot today. Hopefully you got a lot of juice out of today, stuff to go into the day with a nice game plan for. We also talked about how to hold those winning trades longer, which is making sure that you have relative strength to the market. Those are the ones that you want to give a lot of your attention to. All right. Have to head out to our other game plan meeting. We got a lot to discuss today. Have an awesome day of trading. Thank you so much for joining me today. If we did a good job today, please do me a favor, subscribe, hit that thumbs up button. I want you to know how much I appreciate it. I'm going to pop another video up over here for you to take a look at. If you're not in our Facebook group, make sure you go down into the description and make sure you're in the Facebook group. We have some conversations in there as well. Have an awesome day, everybody. I'll speak to you soon.